Welcome back to the best pro for you trading flow. Today we're breaking down Bitcoin. Right now the crypto market is actually a bit oddly moving independently of the traditional risk on, risk off sentiment. If you're trying to trade a fundamental narrative here, you might get chopped up. For context, it's late March, of course, and Bitcoin has just slipped into a bit of a drawdown, let's say here, driven by macroeconomic repricing, like a stronger dollar and a hawkish FOMC expectations. Actually, all the banks are more hawkish rather than the crypto-specific structural environment, let's just call it. We're seeing the fear index also at hitting extreme lows, but that's from a trading perspective, the fundamentals are taking a back seat currently. What really matters today is the structure on the charts, because we're approaching a critical inflection point. And looking at the technicals on the weekly, let's just not forget that we've called this move to the downside a 5-wave move potentially, right? Which means that, and due to the flattening of the Bollinger Band, we may have a local bottom for sure but maybe an actual bottom. That would be in both situations where this is considered an ABC. Let me just make this a little bit more clear. Okay, which means we are to see it move all the way up to the 90 and then decline again to see wave C, which of course is going to take its toll, to be fair. Or the other idea is that this is indeed a expanded flat, okay, and we might have finished, which is much bullish implications in the longer term. But in both cases, okay, we are also potentially dealing with the 5th wave being here. How would that happen? Well, it would happen in this particular manner. That would be a long wave 1, a wave 2, wave 3, wave 4, and then we expect a wave 5. If that happened, we're going to see prices moving lower down, and the RSI probably not, creating a divergence that would then become a much better signal. However, it's still unclear whether that's the case or not. We are in the longer term anyway, and we ought to wait months, perhaps, for this pattern particularly to play out. The important thing is that the bottom Bollinger Band is actually flattening, and that suggests we could see prices moving higher. But as we remain below the wave 4 over here at 76k and the high momentum candle over here at 76,900, 77k, let's say. So that is our zone, 76, 77. As long as we remain below that level, the bias is to the downside in the longer term. Down on the daily, interestingly enough, we are seeing also these sort of dovish, bearish repricing currently. We have come from a peak at around 76k all the way down to 68, and it looks like there is a bit more room to move lower to take out the bottom Bollinger Bands, which is at 66k. Let's just come and put a support level here, because that is going to be quite an important level. Why? Well, because if you look at this particular structure, yeah, also as a flag also, you know, we are coming and we're finding potential cluster at this particular level. So if we do break that low, we could essentially go back to 60k and perhaps lower once again. So on, however, the 4-hour, what we do currently see is that prices are not supposed to go as low as 66.30. They're supposed to go as low as the 68k, which, by the way, it's very close to another level that we'll have to pay very close attention to, is the high momentum candle to the upside. Okay, it's at around 68.30, let's say. So you've got 66.30, 68.30, and to the upside you've got 76 and 77. But let's not forget the 70k and also the 72k. Okay, and this is where, of course, looking at, we're doing this multi-time frame analysis, because we need to see some clusters coming at the same pretty much level. So the important thing, guys, here is that we are actually consolidating. So if we do go lower down, which I think is actually quite possible to go all the way down and retest that level, then even that level, then we could see prices moving all the way up to the upper Bollinger Band, which, of course, if you just consider this as a potential opportunity. Would you want to short even right now with a stop above the previous week's, the previous 4-hour high, and a target at the bottom Bollinger Band for barely, not even 100% risk reward ratio? Or would you prefer to long, yeah, the 68.300 to ensure that we are getting in, and then let that run initially even up to the middle, more to the middle band, first target, and then second target at 71k, 72 or whatever, a third target, and then this is where you start actually trailing that stop and you let it go. It doesn't necessarily need to be just here, because as I said before, we could be looking at potential move to the upside towards the 90k, right? So that is the better idea in my opinion. Let's go down the 1 hour though till we see, is there anything that actually is providing a confluence on the 1 hour chart? Well, the reality is that if we look at the very short 1 hour chart and compare this to the 4 hour and the daily levels that we found, we don't really see much more downside potential, right? And we see that expanded to the downside. We see the upside Bollinger Band also expanding. So when we look at the two, the bottom and the medium leaning to the downside, and the up looking for up, looking a little bit up, then there is probably potentially a bit further room to the upside. But there is something that we need to mention here. If we look at the 1 hour chart instead of the 4, then our support moves up to the 68.50. Okay, and this is important for context, because this could be our entry point. It doesn't mean we cannot go back to 67, 65, but it is more likely that we'll go all the way up to 72k, let's say, rather than down to 66, and that's from the 68.50. So even from a longer, from a short-term perspective, a long position at this location, okay, and I would just even say a first target up to the high momentum candle here, and a bottom just below over here. If you want to play it all the way down, that be my guest again, you go all the way down here, you know, and all the way to the top of the band, you know, you still got a positive risk to reward ratio of 160. So this is a very strong, of course, level to take into consideration closing out. And at the same time, this is the top of the Bollinger Band at 72k. Okay, so if you catch the bounce at 68.5, let's say, the initial target would be the 70, or let's say 70.30 on the 1 hour. This is the median Bollinger Band. With extended targets, of course, pushing to 71.25, I would say 71.70, and then all the way up to 72.37 if you want, or even if you can let it go higher. Expect a bit more room to the downside first, as I said before, okay, maybe even below that level. But once that liquidity is swept, and to me the liquidity seems to be at this point at 68.50, we are probably off to higher territories. So this will be best spot for you. Trade the structure, ignore the noise, and I'll see you in the next breakdown.